Well, what a big year it's shaping up to be here at Trobe Financial. And let me start with an incredibly exciting piece of news. I'm delighted to advise that investor rates are going up. That's right, from 1 November of this year, the investment rates of our 12-month term account and our 2-year account will both increase by 20 basis points. That will mean our flagship 12-month term account will be offering a monthly variable headline rate of 6.45% per annum, with our investment accounts representing ongoing drivers of low volatility income for investors, making a real difference in portfolios. To us, this increase to our distribution rates comes as no surprise and is a reflection of the conservative and disciplined way we seek to construct and manage our portfolios, which continue to be in incredible health. Our approach to building our portfolios with carefully selected, high-quality assets goes to the heart of who we are as a business. We're here to serve you, our investor. And in our view, ours is the best way of extracting ongoing value for investors. And this results in low volatility yield for you. This strategy works, recognised by the ongoing support from you, our wonderful investors, which has resulted in our 12-month term account being the fastest growing fund across any sector here in Australia in the 12 months to May 2023. Vindication of the use of our product across a wide range of investor portfolios. Of course, there's no room to be complacent. We know that investors value their Trobe Financial portfolio investments as a form of protection against volatility. So we make as much data available, updated as regularly as possible to give you the best opportunity to really understand our strategies. It's a level of disclosure that we have not seen replicated in the market. And if I sound like a broken record, well, it's because we have genuine conviction in the belief that the more data we can provide, the better off you are and the better off we are for it. It makes us better managers of our investors' money to put all the data out there for the world at large to digest and then be truly tested by deep and searching questions. Okay, but disclosures aside, why have our portfolio offerings been so successful? Well, in last month's webinar, I touched on our approach to carefully constructing portfolios comprised of very granular holdings, and that is a larger number of smaller loans. And with 11,800 loans in the credit funds and an average balance a little over $750,000, this granular exposure provides a repeatable income experience for our portfolio investors. We're not aware of another manager in the sector that comes close to that level of granularity over such a large number of underlying assets. But it's the quality of the assets that we self-originate, assess and approve that really drives the performance of our portfolios. With a staff of over 250, our real estate credit team is the largest in Australia's non-bank sector. We perform a hands-on deep dive analysis on each loan application to ensure only the highest quality applications proceed to approval and then through to funding. They all say that. I hear you say, well, we can back it up. We monitor our borrower credit grading and credit scores and make that information publicly available. Again, it allows you, the investor, to test our narrative against fact. Consider borrower credit scores. The average Trobe Financial borrower has a credit score equivalent to a borrower in a Big Four bank. So when we say our borrowers are of high quality, we mean it. Granular portfolios of high quality borrowers helps to drive resilience and performance of our strategies. Resilience, which was really put to the test over the last 18 months of volatility. And if you consider the health of our portfolios, you'll observe that they remain in very good shape. Our borrower arrears levels remain embedded within our historical arrears band of 2.5% to 4% per annum, with the credit fund concluding September with arrears at 3.6%. In closing, thank you to each of our 93,000 investors. We hope that the increase to investor rates from 1 November adds real value to your portfolios and demonstrates our proposition as a provider of low volatility income at all points along the economic cycle. Thank you for watching.